What if I told you that you don't need thousands of dollars to start investing? In fact, if you have just $100, you already have enough to begin building wealth. The biggest myth about investing is that it's only for rich people, but that's simply not true anymore. Today, with fractional shares, commission-free trading, and low-cost index funds, almost anyone can become an investor. So if you've been waiting until you have more money, this video might completely change your perspective. Let's get started. Here's something that surprises most people. The amount you start with is far less important than when you start. Imagine two people. One starts investing $100 every month at age 25. The other waits until age 35, but invests twice as much every month. Even though the second person invests more money, the first person often ends up with more because of one powerful force. Compound growth. Your investments don't just earn money. Over time, your earnings begin earning money too. That's why time is your greatest advantage, not a huge paycheck. Starting with $100 isn't about getting rich overnight. It's about building the habit that can make you wealthy over decades. Before investing your first dollar, ask yourself one question. If an unexpected bill showed up tomorrow, would I have to use a credit card? If the answer is yes, focus on building a small emergency fund first. Even saving just $500 to $1,000 can protect you from financial surprises. Why? Because investing is meant for long-term growth. You don't want to be forced to sell your investments during a market downturn just because your car broke down. A strong financial foundation always comes first. Now, let's say you're ready. Where should that first $100 go? For most beginners, the answer isn't picking the next hot stock. Instead, consider investing in a low-cost index fund. An index fund owns hundreds or even thousands of companies in one investment. That means you're not betting on a single business. You're investing in the overall market. Historically, the U.S. stock market has delivered average annual returns of around 10% before inflation over very long periods, although returns vary from year to year. This approach is simple, diversified, and requires very little maintenance. If your brokerage offers fractional shares, you don't even need enough money to buy one full share of an expensive company. You can invest whatever amount you have, even $10. That's why your first $100 can already put you in the market. Now let's talk about mistakes. The first mistake is trying to get rich quickly. If someone promises guaranteed returns or claims you can double your money in a few weeks, be extremely skeptical. The second mistake is chasing trending stocks just because everyone on social media is talking about them. Popularity doesn't always equal profit. The third mistake is checking your portfolio every single day. The market naturally moves up and down. Short-term swings are normal. Successful investors stay focused on years, not days. And finally, never invest money you'll need in the near future. Only invest money you can leave untouched for several years. Here's the secret that creates real wealth. Consistency. $100 once is good, but $100 every month is powerful. Set up automatic investing if possible. That way, you're investing whether the market is high or low. This strategy helps remove emotions from investing. Over time, small investments can grow into surprisingly large amounts, not because you found the perfect stock, but because you stayed consistent while everyone else kept waiting. Remember, you don't need to be wealthy to start investing. You start investing so you can become wealthy over time. Your first $100 isn't about the money. It's about taking the first step. Because years from now, you'll probably wish you had started today. If you found this video helpful, hit the like button, subscribe for more simple personal finance content, and I'll see you in the next video.